coming next is our property and income perspective. We're going to welcome our first speaker. He's Mr. Warren Boothman from ResiFund. Bit of background about Warren. He has been working in the property sector for over 30 years, raised billions of dollars in the past in the commercial and the residential property sector in both listed and unlisted. He's worked at National Mutual, ASX, and Deutsche Bank. Warren is a board advisor to ResiFund. Now he's using his experience in the past decades to launch and co-fund ResiFund. Some information about ResiFund. It is an unlisted property fund, invested in a diversified portfolio of residential property. ResiFund has a national property portfolio and is seeking to provide a total return of 10%. ResiFund is part of the Open Corp Group and currently managing over 1,100 properties. Welcome, Warren, to the presentation.
Well, good morning, Angelina, and thank you very much for that very kind introduction. It's really great to be associated with this forum. I think it's a really fantastic initiative. The title of the presentation, as you know, is Revolutionising Australian Residential Property Investment. And I don't want to sound melodramatic about that, but really what we're trying to do with residential property is what commercial property funds did with the way we invest in commercial property over the last 20 or 30 years. It totally transformed the way we invest in commercial property. And with the launch of ResiFund, we're really looking to do that for the residential property market, providing a much better alternative for investors and advisors on behalf of their clients to incorporate residential as part of their portfolio. And I'm going to chat a bit about ResiFund, but also our view about the markets today. I'll maybe turn to the first slide if possible, please. A bit of housekeeping, keep our dear friends at ASIC happy. Obviously reinforcing here the importance that clients read the PDS, read the TMD, and if in doubt, please seek independent advice. Now, if we move to the next slide, and before we chat too much about the ResiFund itself, I'd like to give some introductory comments about the residential sector. This is a huge sector. It's over $9 trillion. Now, to put that in some perspective for you, that's around 3 times the entire size of the ASX market cap. So a phenomenal sector. And we've recently commissioned independent analysis looking at the long-term returns of residential property compared to other asset classes. And basically over any reasonable investment period, residential property has performed extremely well. And over the last 40 years has delivered a return of nearly 12% per annum. Now that puts it significantly ahead of the Australian stock market, industry super funds, and the majority of commercial property funds. And yet, while that investment return is really attractive, what is impressive to us as that is the incredibly low level of volatility we've seen over the same time frame, which is obviously important for investors. So on a risk-adjusted basis, we think it looks very, very attractive, historically at least. If I can take you to the next slide. As I said, we're looking to revolutionise the way people invest in residential property, because while Australia's been at the forefront of securitising commercial property and making that readily available for lots of investors and advisors, we haven't done that. We're way behind on residential property. But I think it's absolutely inevitable that we go this way. It's a global trend. And just think of the logistics, the sheer cost of housing now. If someone wants to buy an investment property, it might cost them $1 million in Sydney or Melbourne. That means a huge deposit, even larger loan. And yet if they have that, you're tying a huge amount of money in one property, in one location, and with one tenant. And that, by anyone's measure, is not great diversification. So we're trying to provide a much more efficient and professional way for investors to do that. So let's move on and chat a little bit more about ResiFund itself over the next slide or two. We might move to the next one again, please. So by way of introduction to ResiFund, so we are an unlisted property fund, open to investment every day. And there are periodic opportunities where obviously investors are enabled to redeem from the fund. We have different options for our smaller retail clients as well as our larger wholesale clients, and more than happy to chat to you offline about the subtle differences there. Now, we are talking a traditional property fund. So when investors come into the fund, they have an investment in all of our properties. This isn't fractional property interest. They have an investment in all our current properties. And as we expand and grow the fund, clients have an investment in those properties as well, which obviously helps enhance their diversification. Now, our target return, as you can see there, is 10% per annum, obviously after fees and costs. And I'm pleased to say we've delivered that over our first 3 years to June of last year and continue to deliver good returns so far this financial year. Now, that 10% target return is obviously made up of two things. One's obviously the income that we're generating from our tenants. We've got about 35 tenants at the moment, and they together give us an income return for our investors of roughly 3.25% per annum at the moment, which our investors can obviously receive as a quarterly income return, or they're free to reinvest it through a DRP, completely their choice. As for the capital growth, well, how that works is we have a monthly unit price, which is a bit like a share price. And our monthly unit price reflects the value of our properties every month. So therefore, at a point in time. So if an investor comes in this month, they come in at a certain unit price, which reflects the value of the properties today. And in simple terms, as we revalue properties and assuming they go up, then we increase the unit price. So then perhaps if an investor's exiting the fund in 3 years' time, they're exiting based on the unit price at that time, which reflects the value of the properties at that time. So really no different to any other investment. You come in at a price, you're exiting when you sell a property, and that's when you crystallize all your capital profits. All right, moving on to the next slide, please. As I said, one of the great things we're doing about the portfolio is giving investors far more diversification than they could probably achieve themselves. And you can see the geographic spread we already have in our portfolio there, and also a range of different types of residential property. We're inclined to think they're all the same. They're not all the same. And that's one of the advantages we're doing with residential, with the ResiFund, is allowing clients to have exposure to not only more properties, but also differentiated types of properties than they could invest in. And I'd like to give you a couple of examples of that. Perhaps if we can turn to the next slide, please. So here's a great example of a type of property that most people have probably never even heard of. These are referred to as co-living properties. And very briefly, to get your head around it, they look like a two-storey house, but they have inside them anywhere from 5 to 9 tenants per property. Now, the obvious benefit from that is they provide a much higher income return than your average single-family home with one tenant. And that's a terrific way for us to have a higher income return for our investors than just buying a single property family home investment. And these properties are typically provide income therefore of around about 5.5% at the moment. And they're doing extremely well because we're seeing huge rental growth in the market at the moment. And I'm going to come back to that a little bit later on. And not only should our investors benefit from that by seeing long-term growth in the income return we can provide them, it also helps the capital growth of these co-living properties, because these properties are actually valued like commercial property. They're valued on their income or their cap rate. So in simple terms, if the income goes up, all things being equal, the property values go up. And we have a range of these properties in Perth, in Brisbane and in Melbourne. And we're looking forward to seeing with our next series of revaluations, hopefully some further good capital growth out of these properties. If I take you to another example, please, on the next slide. Something very different again. This is a site we recently acquired in Camberwell in Melbourne. Very much a blue chip style suburb. Not very much a blue chip style looking property, as you can see there. While it's a magnificent location, these are 3 old, pretty tired townhouses. We bought them vacant recently. We've now rented them out. And the strategy with this property is generate some income over the next year or so while we work up a redevelopment plan for the site. Then we'll look to redevelop it into probably 12 townhouses or apartments. We'll retain some and rent some out as a long-term investment, and we'll probably sell the balance. And what these two slides are hopefully illustrating is the opportunities we're providing our clients to get involved with properties that they probably have either never come across or, with respect, probably wouldn't necessarily have the skills to be able to benefit from. All right, let's have a look at the market conditions on the next slide. Now, as we're all aware, the residential market receives a lot of publicity through the media, particularly and understandably on the back of higher interest rates. But it's really important, as with all sectors, to look at the fundamental demand and supply conditions, because that ultimately will drive the performance of these sectors. And I'd like over this slide to start that discussion. And this is looking at the supply side in Australia. And what you can see on the right-hand side here is the vacancy rate in Australia now is averaging 1%. It's an absolute historic low. And you can see on the graph there, and in fact, vacancies in residential property have not exceeded 3% in the last 18 years. And this absolutely reinforces the housing shortfall crisis we're going through. That is absolutely real, and that is not going to change in a hurry. We're not seeing it through dwelling approvals, where it's also being inhibited by the inflation, higher costs of construction, and the like. And what that's translating to, if I can take you to the next slide, is pretty obviously on the left-hand side, massive rental growth. It's averaged 13% per annum in the last 3 years and is up over 19% in the last 12 months. And residential property is not rocket science. It's demand and supply. We have more people wanting to rent than we have supply. Rents go up, and that's exactly what's happening. And we really don't see that changing in a hurry because we're not about to address the supply side in a hurry. That's diminishing rather than increasing. And while we talk about interest rates reducing demand in the market, and that's absolutely true for some segments of the market, it's really important to understand that we've also at the same time turned back on the immigration tap. Now, to give you some sense of that, that will involve 195,000 people coming into Australia this financial year alone. And again, keep it simple. They're either going to be renting in an already incredibly tight rental market, pushing rents up, or they're going to be buying. And that population growth is basically coming back to where we were pre-COVID, and that's going to be an ongoing feature. So we really do see that the demand and supply fundamentals for residential property look really, really sound. Forget the media hysteria, the fundamentals look really sound. To summarise it all for you on the final slide, please. What we're really doing with the ResiFund is a couple of things. We're making residential property far more accessible to investors. Whether you're a small retail client, perhaps you're a self-managed super fund, perhaps you're an advisor looking to incorporate residential into a client's portfolio. This can all be done through ResiFund without anyone having to borrow money. They can, but they certainly don't have to, and obviously don't require a huge deposit to invest in our type of fund. We're making it extremely easy to invest. We have an online application process which takes all of about 10 minutes to complete, very easy, and yet highly professional. Now, this isn't a novelty fund. This isn't a gimmick fund. As I said, I spent the first 25 years of my career in the REIT space, involved with some of the largest REITs in Australia. And a lot of that experience I've utilised in helping design ResiFund to what we've now launched in the market a couple of years ago. And it's very much about also, as I was saying, reducing the risk for investors. So we think we've got a really good structure, a much better structure for many residential property investors, suiting a huge range of those investors and advisors. But also really fundamentally, we're in a good space. We believe the demand supply outlook looks really good for residential property over the next couple of years, and we're very, very comfortable with that. Now, we don't obviously have time for questions today. I will provide on the last slide my contact details. I'd very much welcome you to reach out to me via phone, have a good chat, or we can organise a Zoom call if you're a Melbourneite. Love a coffee as Melbourneites do. Thanks so much for listening to the presentation, and I do look forward to hearing from you. Thanks so much. Cheers.
Thank you, Warren.